Welcome to Voodoo Academy. If you have ever looked at trading charts and didn't understand what's going on and it looked like a foreign language to you, this is a course for you. In this course, I'm going to teach you trading from absolute beginner level all the way to building and executing a complete trading strategy. You don't need to have any experience. By the end of this series, you will understand the platform, market structure, risk management, entries, exits, and how professional traders execute trades on a daily basis. Let's start with the most important question. What is trading? Essentially, in a simple word, trading is buying something at one price and sell it at another price. For example, you buy Bitcoin at $50,000 and you sell it at $55,000. Or you buy Apple stock or Tesla stock at $300 and you want to sell it at $500. The goal is to profit from the price movement. Now let's look at chart. At this moment, as you can see, we are looking at GBP USD. It's a Great British Pound against US dollar. In order to make profit, we don't need the market to just go up. We can also make profit when the market is going down. So in my chart, as you can see, when the candles is green, it means the market prices are going up. And when the candles are red, that shows that the price is going down. In order to buy and sell, we can have different positions. So for example, we can make a long position when the price is going up, or we can make a short position when the price is going down. Now, maybe you want to know, what can we trade? Essentially, there are different instruments that we can trade in the market. Say, for example, GBP USD is one instrument. Euro USD is another instrument. Euro AUD is another instrument as well. So the first thing that we can actually trade is called Forex. Forex stands for foreign exchange. Essentially, a Forex pair is the currency that exists in the market at this point. So, for example, as you can see right now is GBP USD, which means we are trading pound against US dollar. Now, for Forex pairs, we have major pairs and then we have minor pairs. Any pair that goes against US dollar is a major pair. GBP USD is a major pair. Euro USD is a major pair. But, for example, Euro AUD is a minor pair because this pair is not against US dollar. When you are trading Euro USD, you are betting if Euro is getting stronger or weaker compared to US dollar. Now, if you have a long position, it means you're betting that the Euro value is going higher. If you're in a short position, you're betting that the value of Euro is going lower. Now, in reality, you are not actually buying or selling anything at this point. What you are doing is you are bidding if the price goes up or the price is going down. And based on the movement of the price and based on the position that you enter, you can be able to profit from the price movement. The next thing you can trade is stocks. For example, you want to buy Apple stock or Tesla stock. So the trading looks the same. You have the same chart. It looks exactly the same. Positions are pretty much the same, long position or short position. But you are able to trade the stock. And again, if you are trading in this way, that doesn't mean that you are actually buying or selling. You are bidding. That's why it is called CFD, contract for difference. Next instrument that you can trade is indices. For example, US 500 or Nasdaq or Dow Jones. The chart always looks the same. The only difference is the instrument type. So if you're interested in trading futures, which is also indices, you can use, for example, Nasdaq, Dow Jones, S&P 500, etc. Next, you can trade commodities or metals, for example, gold. Gold is a commodity that you can trade on a daily basis. Another commodity is silver or crude oil. They are all commodities, and based on the broker that you use, you are able to place trades on these instruments. You can also trade cryptocurrencies, for example, Bitcoin or Ethereum or XRP. Now, why the price moves? Essentially, in the market, there is always supply and demands. Imagine 100 people want to buy Lamborghini and there is only 10 available. Price goes up. Now, if nobody wants to buy Lamborghinis anymore, price goes down. So when there is high demand, the prices goes up. When there's low demand, the prices go down. The same goes with the supply. When there's a high supply, price goes down. And when there's low supply, price goes up. So in the market, we have buyers and sellers. A bunch of people are buying, a bunch of people are selling. And that's how trades are actually happening. We have also news. Say, for example, if a president of a country decides to make a tweet, that can actually change the price movement. It can make the price go up, or it can make the price go down based on the information or based on the news that actually happens. There are things like greed and fear. People, for example, place a trade and they don't close the trade, because the most important thing is to get the profit is to exit the trade that you're in. Now, if you enter a trade and the price goes towards your direction and you don't close it soon enough, the price can reverse and go back. And that means that you will not make any profit out of that. Many people think trading is gambling. Well, essentially, if you randomly click buy or sell, you are gambling. But if you build an edge that you would have a certain amount of confluences why you entered a long position or why you entered a short position, then that means that you are building a trading habit. Now, trading includes many components. For example, you can have an entry strategy, you can have an exit strategy, you can have a trading management strategy. You should have discipline, you should have risk management. And based on all of these, you can say that you're trading and not gambling. Professional trading is risk management, probability, and consistency. You need to be able to build an edge over the market, and that edge, which you can call a trading strategy, is going to make you a profitable trader. Trading is not get rich quick scheme. I would say 99% of beginners lose money in the market on a consistent basis. That means every single day people go into market to trade with the hope to make money, and all they do is losing money. And mind you, if someone is losing money, that means somebody else is making money. So someone takes your money for themselves. And when you are making money, that means you are taking somebody else's money for yourself. At the end of the day, it doesn't matter how many indicators you have on your chart. You might have many indicators or none and still be profitable, or vice versa. In my opinion, risk management is very important. How you manage your trade, how much is your tolerance to lose money. Most of traders, when they want to enter a trade, what they think of is, okay, if I enter this trade, how much money am I able to build? Or how much money am I able to make when this trade goes to my direction? This is a wrong type of thinking. You need to think of how much money are you able to lose. When you're entering a trade, you need to have a very strict risk management. Say, for example, if you have $100 and if you're risking 1%, then you know, okay, if I lose on this trade, I'm going to lose €1. But if this trade goes to my direction, and let's say it hits 1 to 2 risk to reward, then I'm going to make €2. But most importantly is to understand how much can you lose, how much can you tolerate when your trade goes the opposite way. In the next lesson, we are going to discuss about the tools that every trader needs to know. I will walk you through TradingView and all the platforms that are available that you can execute trades. We will build our charts from scratch for our course. If you are serious about learning how to trade, subscribe to the channel and get notified when I upload a new video. And that being said, I will see you in the next lesson.